G'day. Welcome to the closing bell on the 22nd of September. I'm recording it on the Friday. And oh my God, something is happening. How amazing. Markets are actually moving. Maybe not in the right direction, but at least something's happening. So a lot to get through today. Let's jump to the S&P 500, which we're looking at right now. Just give you a bit of an overview. I've been discussing the equity market situation for a while, just waiting and waiting. But I have sort of outlined for you what I thought could take shape with the S&P 500 rallying up into a major sell zone. So just to recap, we've got the rally from the 2020 crash low, very clear, strong wave in that S&P 500, this being a monthly candlestick chart. We've followed it along when things turn bad, monthly sell pivot there, good smashing last year, down to the point of control, midpoint, exactly. Nice bounce off there, monthly buy pivot. And since then, we've had that grinding rally, which has just recently had a nice strong move to the upside, really taking a lot of shorts out of their positions, and probably people who are underweight, fund managers getting forced into the market over the last few months. And I've sort of been pointing out that, you know, it had gone even above the top of the sell zone. So that being the, this is the 75% to 87.5% retracement. That would be the buy zone. And this is like the 12.5 to 25% area of this whole wave being the sell zone. So it's rallied right up even above it. And I'll show you in a second why. But it's been going nowhere for a while. Rates have been, everyone thinking rates are going to, come back down pretty quickly. And that's been kiboshed this week by the Fed. And it's just setting up an interesting situation here in the market, because as we come to the end of September, you've got the high in the move a couple of months ago, and just waiting for a monthly close below the low of that highest price candle in the whole move over the last year would confirm a monthly sell pivot. So that's just the first sign that momentum is waning. And with momentum waning, once the sell pivot comes in, look, because it has already had a big correction last year, which has then had a rally up into the sell zone, and it's turning down again, that can actually surprise to the downside. It could even have another wave all the way down to that midpoint. Now, that's a long way down. That's down at, what, 3,500 or something from 4,400, which is 900 points. That's about a over 20% fall, which could be on the cards, but I guess is a story for another day. But let's just first of all, confirm that, possibly the monthly sell pivot coming into this month, a bit of a danger sign. We do have, uptrend there, 10-month exponential above the 20-month simple. So, you do have to be wary of that, it could just go to retest and then take off. So, I'm open to whatever's coming, but just wary due to the situation in the interest rates, what's going on there, and growth slowing, that there is a chance that this could see a bit of a bigger move to the downside than people expect. So I just want to show you the weekly very quickly. So this is the weekly chart of that S&P 500 or the futures. So this is the correction from last year. We have the buy zone of that and the sell zone of that. And this is where you can see that the rally that we've seen just in the last few months, really rallying right up into the top of the sell zone of that correction from last year. You may remember when it was there, I said, watch out. It could start turning down from here. and was following it along, saying, look, never moves in a straight line, but we could be heading back towards that point of control. So we've seen a weekly sell pivot a while ago, and another sell off there a few weeks ago, which hit support. Nice big rally. And the interesting thing to show you here, and this is how fascinating markets can be if you're as dull as me, is that if I look at that wave down, just the weekly, just that sell-off that we saw, note that we had the rally and look at where it hit, exactly on that sell zone, the 75% retracement, and here it is turning back down again. So we have a weekly sell pivot, a second weekly sell pivot, which is, for me, sort of confirming that we're starting to see movement down and we're breaking through the 20-week moving average. So a bit of a sign here that it could actually continue and surprise to the downside, breaking through those lows from July or a few months ago, sets off a bit of a possible chain reaction to the downside. And look, there may not be a lot of support. So I really think we could see a move to 41.50 for starters, which is the point of control of that whole correction. So you've got that whole sell-off last year, the midpoint of that being the point of control, which you often oscillate around. And you can see in the past, lots of retests of that point of control, retesting the buy zone, finally breaking up through the point of control, heading up into the sell zone. So here we are turning back down again. Oops, a daisy. Turning back down again and breaking through support. You could have a pretty quick trip back to that point of control, around 41.50. So that's sort of my initial target on this of what we could see. Again, nothing ever moves in a straight line, does it? And really from here, breaking up above that high, above 4,600, if it finds support and then breaks out above there, I'm going to have to sort of change my tune, aren't I? But right now, the way it looks, rates breaking out to the upside to 15-year highs, Japanese bonds getting hammered. What happens with their CPI today? What does the Bank of Japan do today? That could be interesting if they do something. Their inflation really starting to take off. So look, a few things around that could see this actually accelerate. And really, that's sort of the situation with our ASX as well. But just quickly on that ASX, this is the monthly. What a dead market. Whole year's trading in January's range, pretty much. Going nowhere fast, but had a sell pivot, monthly sell pivot a few months ago. It's been working away, trying to shake everyone off the scent of whichever direction it's going to end up heading in. But here we are, just selling off again to support. So just the potential of little chain reactions that can come from here. So we just look at the whole correction over the last year quickly. You'll see again that sort of process of heading down, creating that correction, and then really a lot of the price action since just oscillating back to the point of control, back to the buy zone, up into the sell zone, and then point of control, sell zone, point of control, sell zone, point of control, sell zone. And here we are turning back down again. So lots of oscillation and really could be selling pressure, big picture offloading, even though it's going nowhere. So if it does crack down below that point of control, around 69.50, not much lower than where we are here, there's just a chance for a bit of selling pressure to come out of the woodwork and for it to accelerate. So we'd have to sort of break these old lows from a few months ago. That would be if the US is really going. So it's just set up here where it could roll over and have a bit of an accelerated move to the downside. Targets down around that 6,600, 6,400 in the short term. And look, for sure, could turn around and blast off from there. But just short term, you're saying, look, it could have another leg down. And the interesting point about that is if we switch over to the small caps, and the small caps, as you probably know, just getting really drilled. I mean, that looks very different, doesn't it, than the chart that I just showed you of the ASX 200. So really all the money going into the probably the top 50 is where all the safe haven buying is going, X property. So all the money is going in there. It's making the ASX 200 look stronger than the underlying market is, that's for sure. You probably know that yourself if you've been trying to trade anything over the last year or two. It's just been a one-way street, and it still is terrible. And I just want you to note, this being the small cap index, we've got this wave again, 2020 to 22, back to the point of control. Now it's been supported at that point of control, hasn't it? Constantly. But we are in long-term downtrend. So you can see selling pressure coming in whenever it rallies to those moving averages. There's selling pressure. So it's just really been going nowhere, but really the small, really microcap stuff getting absolutely drilled. As you know, things down 70, 90%. So what I'm looking at and what I'm interested in is if we do get another wave down, let's say we break this point of control, I'd give a target, it could be even a quick trip down to that buy zone of the whole wave up from 2020. I'll tell you what, down there, I'm going to be getting pretty interested at picking up some of these really beaten up, especially market darlings from 2020, 2021 in really interesting space, lithium, rare earths, the copper, all that sort of stuff. We know in the end it's going to take off. And this feels like that final capitulation event could be coming. And that's when you want to be stepping up. And some of this stuff is just getting pretty ridiculously cheap. So you can see long-term on that small cap sector, if I'm looking at just a very long-term sort of uptrend, where has it been a good idea to be buying small caps? Just have a look here. Bottom of the crash after years of selling, bottom of the crash in 2020. Is it going to be a case of another move like that, which would make sense, wouldn't it? So that's sort of what I'm thinking. This is why I'm about to open up a few places for a service only for people who are already members of one of our services at Fat Tail. So if you're not a member, go and join up to something, one of the cheapies, and you'll get possibly a chance to be one of the few who I'm going to allow into my microcap trading service. And really the idea for me is that some of these stocks are just getting so hammered that I'm starting to get interested in just having a crack at some of these, because look, I'll show you one which is actually a current position, and I'll quite happily say we're down on the position at the moment. That's Big Tin Can Holdings, tech stock. These guys in sales enablement software, they have revenue or ARR heading towards around 150 next year. Market cap hit around that level as well. So these stocks that were once trading at 10 times revenue, this thing now, its enterprise value pretty much equivalent to next year's next year's revenue, ARR, heading towards cash flow positive. Still not quite there yet, but they're cutting costs and looking at things as people running the ruler over them for a potential takeover. But like the rest of this stuff, it's all just going lower and lower and really getting cheaper and cheaper. And, this sell-off that we're seeing, I think there's a bit of a tree shake going on in this one because it's just broken through these lows and there's not a lot of volume coming out. It's not, there's no, shareholder notices coming out from the major shareholders, just dribbling lower with people just hitting the sell button because the pain threshold's getting hit. But this company is now starting to get pretty cheap. So these sort of things are cropping up all over the place. And I'm just getting interested in having a look at some of this stuff Vulcan, market darling up at 16, 17 bucks. Geothermal, lithium over in Europe, so hot, and now no one wants them, under $3 and selling off. And as you know, I'm looking at these waves, looking for the buy zone of the wave and waiting for the moment when you have that capitulation, which I think still can be coming, and then the reversal. That's the sort of thing that I'm getting excited about, and why we're going to have a bit of a chat with you next week. So if you have a chance to join me at that symposium, please do, because look, you may think I'm completely bonkers wanting to step up in something like this, but really, you really do have to keep your mind open to the fact that what's happening at the moment is a monetary phenomenon. We're seeing a big clear out of positions at the moment in the future facing metals, these things that we know in a decade or two are going to be huge demand. There was a reason why these stocks ran so hard a few years ago, and now here we are with investors just dumping them at any price. And if we get another leg down, it's going to start getting pretty exciting in my view. So let me just show you very quickly why I think this is so exciting. And this is a chart of Amazon. And, we had the run up from 1998 to 2000. Here it's at $5.50, $5.60 high. Obviously, that's after all the stock splits and all that sort of thing. So the actual price then was different. But here we've got that run up into 2000. And then we know we had the tech wreck. The stock fell 95% from $5.60 down to 28 cents. Now, if you had bought that stock at $5, you were on the right track, but did you survive the 95% fall over that 2 years? And this is what I'm saying about these opportunities that are coming up. We're seeing this huge crash in things like those future-facing metals and etc., other tech stocks, what have you. So when you're looking at it down 95%, you're looking at it and saying, well, this thing's either going under, going to zero, or if I believe in that story, if I think tech is really coming to fruition, that's the place you want to be. If you're thinking really long term, you're looking at something like this and saying, well, I'll step up and just have a crack. Look, if it goes under, it goes under. You lose 100%. But just consider what can happen down the track in these things. And the fact that stocks do fall 95%. And if you're just looking at that down 95% and steering clear, well, have a look at what it did. We all know what Amazon did over those coming years after it crashed 95%. So this is sort of the thing that I'm looking at, is that these companies may be absolutely hammered, but if they survive and come out the other side, and we're going into this whole new energy transition revolution, electric vehicles, the huge demand that's coming, there's going to be some pretty huge opportunities coming for those that want to have a crack. So that's how I'm looking at things. Hopefully all of that makes sense. Market's bearish in the short term. Think it could get a little unwieldy, but those small caps are so hammered already. Another leg down is going to start getting pretty exciting. All right, cheers. I'll come back with more next week.